Good day, madam and friends. Me, Vanusha Raghu from Group 1, along with my group mates, which is Ayman, Povendini, Vijayavarman, and Maidishwaran. At here, we would like to present about the Maxis Berhad, which is BURSA Malaysia's main market. In this presentation, we would like to present about the recent changes in accounting regulation or policies, corporate reporting environment adopted, implemented by the company. So let we have a look to our presentation.
Good day everyone. Today my group will present on the recent changes in the accounting practice of the Maxis Berhad. So specifically related to their device care or the device protection program. So these changes implemented in quarter 1 2025 align with the Maxis which update accounting standard and particularly in the recognition of revenue. So previously, Maxis acted as the principal in the program, meaning they recognized the full gross revenue from the customer payment and then paid to the third party, AIA General Berhad, which is insurance coverage. However, Maxis now acted as an agent. This means Maxis only recognize the net commission is earned from the program rather than the gross amount. So as an agent, Maxis play a role as an intermediary between the customer and the insurance provider. So as the result, the service revenue reported by Maxis is now lower as only the net commission is recognized. However, the changes in the EBITDA earning before interest, tax, depreciation and amortization is neutral, seeing the associate costs also reduced. This shift follows the MFRS 15, which require company to recognize revenue based on their role in the contract. So in conclusion for me, these changes enhance the transparency and ensure Maxis financial reporting is more accurate and aligned with the international accounting standard. While the reported revenue is lower, the company financial statement is now provide a clear picture of its actual involvement and earning from the program. So that's all for me.
Here are the three main implications of the recent accounting and reporting changes at Maxis. First, the changes impact how Maxis report in revenue because of the new treatment related to the device protection program. The company's service revenue now appears lower. This may give the impression that performance has dropped even though the actual business activity may not have been changed much. Second, the change reduced comparatively across periods. Since the Maxis is now using a different way to recognize revenue, it becomes harder to compare this year's result with previous year because the accounting clarification is not the same. Finally, the changes affect investor perception. When the investors see lower service revenue, they may assume the company is not underperforming. That is why clear and transparent disclosure are important to help stockholder understand that the lower numbers are mainly due to accounting changes, not operational issue.
Hi everyone, I'm Maidishwaran Ramesh. I'm going to present about the Maxis relation to the accounting standard MFRS 15. Changes in accounting treatment for device care plan principal to agent. Maxis reclassified its device care service from principal to agent under MFRS 15 when the entity acts as an agent is recognizes only the net fee or commission instead of the full amount billed to the customer. This caused Maxis service revenue declined 0.5% as reported in the Pinanga article. The second one, contract modification must be accounted for under MFRS 15 rules. Maxis shift in pricing and services structures noted in the article as the part of their transformation, which is required contract modification accounting. When contract terms change, for example like 5G upgrade, like changes in plan, Maxis must access whether it's a separate contract or the main contract. The third one is enhanced disclosure requirement under MFRS 15. This ensures that Maxis comply with the revenue recognition principle outlined in the Malaysia Financial Reporting Standard (MFRS). This is required under the MFRS 15 disclosure section, which asks the company to explain the performance obligation, significant judgment, revenue recognition policies impact, the changes in the contract assessment. The last one, the accounting for contract costs MFRS 15. Telecommunication company like Maxis incur the contract acquisition costs or commission of contract fulfillment costs like installation and activation. Under MFRS 15, these costs may need to be capitalized and amortized as not expensed immediately. The article mentioned the margin improvement partially due to the optimized contract cost treatment and the accounting adjustment consistent with MFRS principles. That's all for me. Thank you.
Hi, good day everyone. So I'm Vijay. So today I'm going to be presenting about the impact of changes on Maxis financial reporting. As we see, the first one is the impact on revenue. Because the new revenue recognition method, Maxis now report a lower services revenue. Even though the number of looks smaller, it actually gives a clearer and more accurate picture of the real revenue Maxis earns. This is because the new method reflects the net revenue is from the device care program rather than the gross amount before the changes. So overall, the changes improve the transparency and make a financial statement more accurate. So next is the impact on cost and margin. On the impact of cost margin, since Maxis no longer incurs the insurance related costs for the device care program, in their expenses are now lower. So even though the services revenue went down, the reduction in cost helped balance things out. As a result, important performance metrics like EBITDA remain stable and are not affected by the changes. This means the Maxis is still able to maintain the healthy financial stability. In shortly, revenue look lower because of the better reporting, but margin remains strong because the related costs have decreases. So overall, the changes lead to clear reporting without the hurting Maxis financial performance. Okay, that's all for me. Thank you.
As a conclusion to our presentation, Maxis has successfully responded to recent changes in accounting regulation and corporate reporting requirement by updating relevant MFRS standards, strengthening governance and control, improving the transparency of its financial and non-financial disclosure. This effort demonstrate the company's commitment to compliance, accountability, and high quality reporting, ensuring stakeholders receive accurate, reliable, and up to date information. So, thank you for listening to our presentation.